and welcome to Vox Markets. I am John Human, and I'm delighted to be joined today by Jonathan Owen, Chief Executive of Metals One, the Northern European battery metals explorer. How are you doing, Jonathan?
Hi, John. Very well, thanks. Good to see you.
Good, good to have you on. This interview followed some really exciting news towards the end of last week. Some drilling results, some very positive drilling results, and a bit of strategy update around the project. Perhaps give us a recap of those results to start with.
Sure. So these are the results of the drilling program we undertook in December. We received the assays earlier in February and released the assays results. I think it was February 12th, around about there. And since then, we've updated our strategy based on what we learned. So in terms of what we found and the objectives of the drilling program, let me just touch on that. So really, the objectives were twofold. So we've got the R1 inferred resource of 28 million tons. That's 28.1 million tons of nickel, copper, cobalt, and zinc, and which is quite a sizable deposit. And we wanted to understand the opportunities for expanding that. So there were some anomalies to the east that we were looking to prove and test, see if there was geological continuity, grade continuity in that direction. So we decided to undertake a small drill program, 8 holes, around about 1,600 meters in December. The results came back very positive. All 8 holes intersected with black schist, mineralized black schists, which is our target mineral, at grades that we were hoping to find around about 0.8, 0.22% nickel, and that was great. So we drilled right up to the edge, the eastern border of our existing tenement, and it was quite clear that this ore body continues to extend to the east. So we've now pegged the ground to the east. Unfortunately, this ground is slightly boggy, slightly damp, so we're going to wait till next winter, probably January, February, to drill there. We need the ground to freeze quite hard so we can get move the drill rig around on that. So that's, we put a pin in that now. We're going to move on to P5, which is another target that we have. We can talk about that in a minute. But the second objective really of this drill program was to gain a much better understanding of this style of mineralization. Its genesis, lithology, petrology, and so on. These minerals haven't really been explored in anger for probably 10, 15 years at least. So things have moved on in terms of technologies and understanding of geological processes. So this drill campaign really allowed us to fill a lot of gaps in that understanding, and through that update our prospecting model. So our prospecting model is it's our template, if you like, the lens that we look through to identify more of these types of ore bodies, and in doing so, reduce our exploration risks significantly, which equates to then getting a bigger bang for your buck in terms of exploration expenditure. So it ticked both those boxes for us. So a hugely successful campaign.
Yeah, absolutely. Talk us through the mineralization you're targeting, black schist, and why it's so important, this Talvivaara-style mineralization, which I understand is one of the lowest ores to produce, both economically and environmentally. This is massively significant. Can you sort of give us a feel as to why that's the case?
Yeah, so this is the black schist is quite a soft material. It's relatively low grade compared to a high grade nickel sulfide deposit you might find in Canada. But it enjoys huge volumes, and you've got economies of scale there that allow, from a mining perspective, so hauling and digging the stuff, it's pretty low cost per ton. But then the style of mineralization, the mineralogy of it, allows bioheat bleaching, which is one of the cheapest, lowest cost, lowest carbon footprint methods of extracting metals from ores. We say Talvivaara-style black schist because there is a mine just down the road called Talvivaara that mines exactly these types of minerals, and they've been doing that for a number of years now, and they are one of the lowest cost nickel producers in the world. So when we talk about the nickel commodity price fluctuating, the volatility or where it is or isn't at the moment, it's kind of irrelevant for a first quartile producer, because you're turning quite a decent profit throughout all phases of the commodity cycle, up and down. And that's the opportunity for us here is to build another Talvivaara effectively. Talvivaara is Europe's largest nickel producer, and there is a structural deficit in the supply of nickel to the European market. So if we can join them and help fill that deficit, we're on to a winner.
Yeah, yeah, absolutely. Talk us through the strategy update then. So after these positive drilling results, you've obviously updated on strategy as well to really get the most out of this valuable asset. What are the changes been there, especially on your key targets R1 and P5?
Yeah, so the key changes are the headline change, I think, is actually standing out our stall in terms of where we want to go with this. What is the objective? What, as an exploration company, we're not going to just drill and sniff rocks for the rest of our lives. We need to get somewhere. We want to unlock the value, return that value to the shareholders somehow. JV, sell, owner, operator, new mine, whatever that might be. But we need to get there. So we set ourselves a target of 200 million tons. So we want to increase our, at R1, we have the 28 million tons. At P5, we've got a range of 16 to 24 million tons. We want to increase that now over the next 18 months to around about 60, 80 million tons, and then beyond that up to the 200. Why 200? 200 million tons for us represents a world-class mining operation. A significant operation with a life of mine of over 20 years, producing 20 million tons of ore per annum, and enjoying the economies of scale that come with that. So, when we set ourselves a task of achieving that, of course, we need a model, a prospecting model, a good understanding of this style of mineralization. And that's been part of the strategy, is to develop this prospecting model, we're calling it. And the output of that drill campaign in December we just talked about, that has greatly helped improve that model. And as I said before, reduce our exploration risk, give us a bigger bang for buck in terms of exploration expenditure. So we're not hanging around. We are moving quickly now through to developing P5 up to a significant level over the next 12, 18 months. And that will probably represent a larger proportion of this 200 million tons that we're targeting.
Yeah. And when you talk about a new prospecting model, what exactly do you mean by that? What does that entail?
Yeah, you can think of it abstractly. It's really an understanding of the style of mineralization, in what setting, context does it exist? How does it behave in terms of its continuity? Is it sort of nuggety? Does it just exist in one discrete package over here, or does it tend to continue? Is it strata bound? Is there continuity geologically across the region? And then the grades within that mineral, black schist mineralogy, is that consistent across that? So we need to understand that first of all. Second of all, then, how is that ore body or mineral represented when you look at the geophysical data, when you look at the airborne gravity surveys or EM surveys? What are the signatures that we need to look out for to hone in on these ore bodies? So that all comes together as what we're calling the prospectivity model.
Okay. No, lots of really technical work to take this forward. Absolutely, market leading work going on there. I guess the important thing for investors to understand then is the context within which this development is taking place. Why Northern Europe? The long-term goal of the mine, long-term goal of the company to provide this metal for the European market. So in terms of the context, sort of tell us where you sort of fit into some really quite significant developments, and as you say, deficits within the Northern European battery metals market.
Yeah, so there's a number of wins pushing us forward a lot in this direction. So Metals One was founded really specifically to focus on supporting the green transition for Europe. So the majority of critical metals or critical materials, battery metals, nickel, copper, cobalt, lithium, whatever they may be, most of those minerals are currently being sourced from abroad. And with that comes significant supply chain risk, political risk, quite often significant carbon footprint, not just through the transport of minerals halfway across the planet, but from the source itself. So if you look at Indonesian nickel, which has been in the headlines recently, they have a huge impact on not just on the carbon footprint of what they produce, but in terms of environmental and social impacts as well, polluting rivers and moving communities, etc. So the EU wants to bring that, as much of that source of supply within its own borders. So looking for domestic producers. And that's where the bottleneck is. It's not in the processing necessarily. It's in the feedstock itself, in the availability of the ores that produce this metal. There's very little. Talvivaara is one of only a handful of significant producers. So we're looking to to step into that gap and help the EU or Europe, let's call it, if you include the UK as well, become self-sufficient in these areas, and support our future generations with low-cost green EV batteries, for example.
Exactly what the market's looking for, and it's a fantastic resource. It's certainly well on track to meeting that very, very pressing need. Congratulations, Jonathan, on the dual results, and really looking forward to the progress of this strategy. Thanks for coming on.
Thank you, John.
Thank you.